Take problem number 4 in page number S75. See, in this we are given with some set of informations. We are required to prepare the P&L account. See, mind it carefully. Normally that P&L is asked for uh, short type question, that is for 5 mark. Sometimes the same may also be asked for essay type question. But generally, essay type question with some set of informations, if it is a P&L or normally balance sheet. See, this question is very apt one for 5 mark. We are given with some set of informations, and of this we are required to prepare P&L account for the year ended 31st March. Interest on loan is given. That interest on loan 250 rupees. Mind it carefully. Informations are provided in consideration of, it is in terms of thousands. So for bank accounts, informations are available. You please verify, is it given in terms of thousands or normal information is given 2,50,000. So first you check it up. Okay, here it is given in terms of thousands. 250 is given. So where we have to take interest on loan is interest on the loan what the bank has already sanctioned. That interest, it's a income for the bank. Another one, interest on savings. As a customer, we are maintaining the savings account with the bank, for which bank is providing the interest. That amount comes to 150. So 150, it is a expense for the bank. Interest paid. Interest on what they are paying? Interest on the savings deposit what we are maintaining with the bank, for which they are paying the interest. Another one, interest on cash credit 160 rupees. Basically, you please mind it. If want, you please note it down. Cash credit is a liability account. It is a loan account for which they are charging the interest. So it is a income. Interest on deposit. Any term with any amount with the term deposit is it is a deposit. So what the interest charged for the deposit is expenses for the bank. Okay, so this interest on deposit or savings deposit or savings account, cash credit is different, cash certificate is a type of deposit. Okay, so recurring deposit, whatever the name called, if the interest is paid against the deposit, then it is a expenses. This comes under schedule number 15. Then interest to overdraft. Basically, you know very well, overdraft is the amount we are required to repay it to the bank. So interest charged on the overdraft, along with the interest we have to repay. So it is a income. Discount on bills, bill discounted. Already I told you, here we are having three terms: discount on bill discounted, and rebate on bill discounted, and another one is uh, bill discounted. So these all the terms we should know. Here it is discount on bill discounted. You please make a note of it, that discount on bill discounted what we are having here, this should be is in schedule number 13. And also it is a type of income. If it is simply given as, this is additional point, you please mind it, if it is simply given as bill discounted, then it is a advance taken in balance sheet, advances. Whereas if it is given as rebate on bill discounted opening balance, rebate on bill discounted closing balance, that should be in schedule number 13. Opening balance should be added with schedule 13, that is discount on bill discounted. Closing balance deducted from schedule 13. Then another one point, simply if you are given with rebate on bill discounted, no adjustment is given, only the amount is given in the information as a information, as a one of the information. Then you have to take that, consider that rebate on bill discounted, if it is given as one of the information, simply no opening balance, no closing balance is specified, then that amount is taken as It is presumed that that amount is a closing balance. No separate treatment is given. That amount, it is assumed that already adjusted in schedule number 13. So no adjustment is required. Whereas here, in this problem, it is given as discount on bill discounted. So we are taking it in schedule number 13. So please mind it. If want, you please note it down. Bill discounted is a liability. Discount on bills discounted is in interest earned in schedule number 13. Then commission, exchange, brokerage, etc. You know very well. This is schedule number 14 as other income. But you should have the question that you should know that why the commission is mentioned, why the exchange is mentioned. If we are purchasing the draft, demand draft, then we will have exchange, right? Exchange is one of the item mentioned in the draft challan itself. Exchange for issuing the draft. Commission, like that, for certain type of transactions, as per the rule, bank is charging the commission. Okay, so those things are taken in schedule number 14. Then another one, audit fees and director fees. Both the items are operating expenses. Obviously, those things should be in schedule number 16, operating expenses. Then rent, taxes and insurance. This is taken in schedule number 16, operating expenses. Now we have taken all the informations accounted in the respective schedule. Now you close the schedule, and in this income side, interest earned and other income. Expenditure side, interest expended and operating expenses, then provisions and contingencies. For this provisions and contingencies, you will have to take, normally this will have two effects. One, the provision, if you are having, that should be taken here, and another one effect should goes to the balance sheet, provisions, right? Next to schedule number 5, I think so. Then another one, if you balance all the items after entering it in the P&L account, you will get profit for the year is 10. That is, this is after expenditure, that is income side, expenditure side. Then point 3, category 3, you will have to take profit for the year. Here that comes to 10. Then if you are given with the previous P&L account, that should also be accounted here. Then total profit we will have 10, right? So if we are given with the old P&L account, then another one is after this profit we have to take account appropriations. On this, always you please mind it, whether it is given in the question or not, you will have to take transfer to statutory reserve. This is the compulsory one. You will have to take 20%. This will have two effects. One effect in appropriation side, another one effect is in another one effect we have to take it in balance sheet. Okay, so two effects we have to take, provisions and appropriations. On that appropriation, statutory reserve. Previously it was 15%, now it is 20%. Mind it carefully, whether it is given in the question or not, we have to take this amount of statutory reserve 20%. That statutory reserve should be applied in current year profit. So that is also accounted. What is the final figure? That final figure transferred to profit for the year is 10. Appropriation comes to 2. Balance is the final profit as per the P&L. That balance should be transferred to P&L account, where we have to take this P&L balance final figure of 8 rupees. This goes to reserves and surplus in balance sheet. On that, reserves and surplus is schedule number 2. 2A is a reserve, that is a statutory reserve you have to take, and 2B is a surplus, which is what the profit available transferred to balance sheet. That should be taken in, that should be in surplus 2B, schedule number 2B. Okay, like this you will have to prepare the P&L account.